This is Nightly Business Report with Sue Herrera and Bill Griffin.
Blue chips climb. The Dow logged its 7th gain in 8 sessions as investors look to earnings to lead the market higher.
Spending showdown. President Trump lands in Brussels to meet with NATO allies, and he brings a clear message: pay up.
Go big or go home. Why Texas is now the best state for business. Those stories and much more tonight on Nightly Business Report for this Tuesday, July the 10th.
And we bid you good evening, everyone, and welcome. The S&P 500 closed at its highest level since early February, but it was the Dow that led the charge. The blue chip index advanced for 4 straight days. The small cap Russell 2000 hit a record midday before pulling back a bit. Investors were focused on earnings, hoping that Pepsi's strong earnings report today will set the tone for the rest of the season. The Dow Jones Industrial Average rose 143 points to 24,919. The Nasdaq was up 3 and the S&P 500 added 9. Bob Pisani explains why this earnings season is critical for the market.
Last earnings season was all about raising estimates thanks to corporate tax cuts and share buybacks and expanding global growth. But a lot has changed in the last 3 months. This time around, investors really just want to see companies maintaining their earnings estimates and not cutting them. That's important. Now, that may seem like a bit of a downgrade in expectations, but it's not, given the big gains we've seen in the earnings recently. Second quarter earnings, for example, are expected to grow about 20% in the S&P 500. That's not far off from the first quarter's 26% growth. Despite the trade war talk, companies still seem comfortable with the earnings guidance that they gave earlier in the year. And that's a very bullish sign for stocks and one of the reasons the market has been moving up recently. The markets have held up remarkably well if you look at it. Take Monday, for instance. Stocks surged on the mere absence of any new trade war headlines. The markets come to believe that cooler heads will prevail on global trade. That might be wrong, but that's what the market believes right now. But it goes beyond trade. The market is pricing in an awful lot of good news right now. So, for example, solid U.S. growth coupled with muted inflation has put the Federal Reserve in a very passive stance, and it should keep them from aggressively raising interest rates beyond what is already expected. Second, growth over value is the big story in the market. Traders believe that technology, the ultimate growth story, will continue to outperform. Tech earnings are expected to grow 25% in the second quarter. That's a big deal and a main reason the market's up so much. Third, higher commodity costs and a stronger dollar. They've been minor worries, but they have not yet translated into really negative trading action. Even PepsiCo today shrugged off the idea of a strong dollar drag when it reported earnings today. But corporate guidance could derail this rosy scenario if we see earnings estimates for the third and fourth quarter drop below about 20% growth. That could signal rockier times ahead. We'll keep an eye on that one. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And one thing to keep an eye on tomorrow is a late report today from Bloomberg that the Trump administration is preparing a list of new tariffs on $200 billion worth of Chinese goods. Stock index futures fell on that report, and yields on the 10-year Treasury declined on the prospect of an ever-widening trade war. The Trump administration last week, as you know, imposed 25% duties on $34 billion of Chinese imports. China immediately then retaliated. Meantime, the president did arrive in Belgium today for the NATO summit and the start of his 4-nation European tour. It is a trip that Wall Street will be watching carefully and one that is expected to be tense. And it started with harsh words being leveled by the president and by NATO allies. Eamon Javers is in Brussels for us tonight.
President Trump arrived in Brussels Tuesday to face an alliance of military allies poised for a confrontation with the American president. Even so, his meetings here are being nearly overshadowed by speculation about Trump's sit-down later in the week with politically beleaguered British Prime Minister Theresa May and his face-to-face session next week with Vladimir Putin of Russia.
The President of the European Council.
Here in Brussels, EU leader Donald Tusk directly replied to President Trump's persistent criticism that the European allies don't spend enough on defense.
Dear Mr. President, please remember about this tomorrow when we meet at the NATO summit, but above all when you meet President Putin in Helsinki. it is always worth knowing who is your strategic friend and who is your strategic problem.
As he left the White House for his three-part European trip, Trump suggested he's surprised at how difficult the meetings with the U.S. allies will be.
I have NATO, I have the UK, which is in somewhat turmoil, and I have Putin. Frankly, Putin may be the easiest of them all. Who would think? Who would think?
Even Trump's critics agree that he has a point. Many NATO countries are not living up to a 2014 commitment to spend 2% of their GDP on defense. Just 5 countries are expected to hit that goal now, although U.S. officials say they have commitments from others to crank up spending.
He's right because the Europeans are not spending enough since the 1990s and they need to catch up. But he's wrong because the message becomes so polarized and so toxic that European leaders will struggle to sell to the European voters, oh, we need to spend more on defense because of Trump. That's not going to work politically. So I think that's why it's important that he should have kept his message private and let the European leaders do the hard work.
In a tweet today, President Trump explicitly linked defense spending with European trade. The president arguing that the European allies aren't being fair to American taxpayers, ensuring there'll be plenty of drama this week at NATO. In Brussels, I'm Eamon Jabbers for Nightly Business Report.
Here at home, President Trump nominated federal appeals court Judge Brett Kavanaugh to the Supreme Court. Kavanaugh is a Yale graduate and a former clerk to retiring Justice Anthony Kennedy. If confirmed, he could shift the balance of the court to the right. And as Kayla Tausche reports, he could also shift the landscape for business.
Ahead of a fierce confirmation battle, Judge Brett Kavanaugh began meeting with key lawmakers on Capitol Hill today, beginning with Senate Majority Leader Mitch McConnell.
I think the president made an outstanding nomination.
Kavanaugh served on the U.S. Court of Appeals for the D.C. Circuit, which hears a high volume of cases on government regulation. On that topic, his record is clear.
He is generally suspect of the administrative state, and I think he wants to restrain it and force Congress to be a little bit more explicit in the laws that it writes.
He voted to limit Obama-era regulations, including EPA rules on greenhouse gases and hazardous air pollution, FCC regulations on internet traffic, and he found the Consumer Financial Protection Bureau, now the BCFP, unconstitutional. But his rulings have been narrow in scope.
When you look at the CFPB case in which he ruled that the CFPB as structured was unconstitutional, he didn't go out and strike down the entire CFPB. He fixed it in a very narrow way, giving the president the power to fire the director.
At the White House podium, Judge Kavanaugh said if confirmed, he'd keep an open mind on every case.
My judicial philosophy is straightforward. A judge must be independent and must interpret the law, not make the law.
Kavanaugh's critics have seized on his political roles, working for Ken Starr during the Whitewater investigation and the George W. Bush White House, his ties to a California judge who resigned amid sexual misconduct allegations, and his view that a sitting president should be shielded from investigation. Here's top Senate Democrat Chuck Schumer.
No investigation of a president. Is it any wonder that President Trump chose Kavanaugh from the list of 25? When we know he's obsessed with this investigation?
Democrats stalled Kavanaugh's previous appointment for 3 years. 2 Republican senators who remain key today, Lisa Murkowski and Susan Collins, supported his 2006 confirmation, which passed 57 to 36. President Trump is pressing lawmakers to work quickly.
This incredibly qualified nominee deserves a swift confirmation and robust bipartisan support.
The confirmation of Justice Neil Gorsuch took roughly 2 months. Republicans hope to confirm Kavanaugh before the new Supreme Court term begins in October. For Nightly Business Report, I'm Kayla Tausche in Washington.
Well, as Republicans and Democrats in the Senate gear up for that latest battle, a new Gallup survey commissioned by Wells Fargo found that, in fact, the political climate in Washington is the biggest threat to the U.S. stock market. Nearly half of those surveyed said they are very worried about that. Eric Davidson is Chief Investment Officer at Wells Fargo Private Bank. He joins us to talk more about those findings. I'm curious about the findings here, Eric. I mean, typically, people want gridlock. They want partisanship in Washington because it gets them out of the way of business and allowing them to do their business. So what specifically do you sense people are worried about in Washington right now as it pertains to the stock market?
Yes, the political worries are the top worry, and you're right. Oftentimes, the gridlock is seen as a positive, but the level of acrimony and the level of partisanship really seems to be digging at investors, no matter if they're on the right or on the left. That is the top worry these days of investors as they look out into the future.
Now, trade is also one that the market has been worried about, but it didn't rank quite as high as I thought it would be. But you make the point that the timing of this particular survey may have influenced that.
Right. We did this survey in May, and I bet you if we did it now that the first shots of the trade war have in fact been fired, it probably would inch up. But that likewise is sort of tied into the whole political realm as well.
But again, is the concern, I mean, usually people would be worried if this is going to affect the economy in some way. It's going to hurt jobs, it'll hurt profitability and so forth. So I'm stymied in trying to make the correlation between their concerns about what's happening in Washington and the impact it'll have on profitability in the United States.
Well, the interesting thing for investors, while there are certainly these worries out there now, there's just so many things that are going well for investors and consumers overall. Right. And I think that seems to buoy the confidence, as we see in this survey, of investors. It's high, but it's not near the all-time highs. And so it's sort of weighing these really good things, these great tailwinds that are out there with these challenges that they do see in front of them. So I would say in general, investors are happy, but they're worried for the future.
How much of it has to do with the way the acrimonious situation in Washington is playing out? It's a little bit more public this time around than it has been. There have always been tensions, and as Bill pointed out, there's always been the talk of gridlock and Washington and Wall Street interaction. But it seems as though it just seems to be much more public and perhaps much more persistent than it has been in the past.
I think you're right. I think the acrimony levels have gone up, and the partisanship, probably the divide is wider. Certainly not the widest it's ever been. There's certainly been points in our history where it's been wider, but it's pretty wide right now with people on the left and people on the right not finding a lot of common ground. That makes people, from an investment standpoint, be anxious for what's to come.
Interesting. Eric Davidson with Wells Fargo Private Bank. Thanks for your insights tonight.
Thank you.
It is time to take a look at some of today's upgrades and downgrades. Dow component Walgreens was downgraded to inline from outperform at ISI. The analyst cites a number of headwinds, including an increase in online competition and the potential for muted profit growth. The price target is 67. The shares fell a fraction to 63.20. Chipotle's rating was downgraded to underperform from neutral over at Mizuho. The analyst cites the lack of clear innovation in the near term. The price target is $330. The stock fell 2% to $454.21.
Meanwhile, eBay's rating was downgraded to hold from buy at SunTrust Robinson Humphrey. The analyst there cited headwinds from changes to sales tax laws. As a result of that recent Supreme Court ruling, the price target is now $40. The stock fell 2% today to $37.04. Wynn Resorts was upgraded, though, to buy from hold at Stifel Nicolaus. The analyst called the recent macro concerns related to both trade and the World Cup soccer tournament possibly diverting high rollers away from gaming tables. He says it's overblown. Price target $207. Stock rose by 3% to $165.38.
Still ahead, buybacks are at a record, and that could be good news for investors.
The number of job openings is no longer at a record, but it's still pretty close. According to the Labor Department, 6.6 million positions are waiting to be filled. That's a level that remains consistent with a tight job market. The so-called quit rate in May rose to a 17-year high, and that usually indicates that Americans are confident that they can leave their current position for better opportunities.
More than a third of small businesses cannot fill open jobs. That matches a record, according to the latest report from the National Federation of Independent Business. The survey found that 21% of mom and pop shop owners cited trouble finding qualified workers as their single most important business problem.
Speaking of which, the Transportation Security Administration is looking to add thousands of workers to its ranks, and it turns out recruiting is becoming trickier in this tight labor market. Kate Rogers reports tonight from Newark Airport.
The TSA is training its next generation of talent.
Do you guys have any questions?
The agency, tasked with keeping the nation's skies safe, is currently looking to add to its ranks. Instructors like Efren Arocho are preparing new officers with mock screenings, image interpretation, and even an explosives demonstration.
3!
At a federal law enforcement training center in Glencoe, Georgia.
What makes a great officer is a sense of being responsible, making sure you work on time, your uniform up to par, always have professionalism, treat everyone with respect.
The agency is currently hiring for thousands of positions that range from security officers to canine handlers at airports across the country. Entry-level salaries begin at around $35,000 a year, but vary depending on role and location.
With the uptick in the U.S. economy and increases in wages and compensation packages, I think just like most employers, we have some steeper competition. So we work hard to sell the benefits of federal employment to try to attract folks to our very important mission of securing America's traveling public.
You'll be going straight to the AI. All right, thank you.
New hires like Valeria Garcia attend the TSA Academy and then have an additional 60 hours or more of instruction with a coach on site at their local airport. Accuracy is key. Trainees are instructed on using X-ray machines properly, following protocol, and working with passengers.
I actually think people believe that we're taught to not really care, to treat them just, can you please hurry up, to treat them just wrong, and it's not like that. We actually learn how to treat passengers with a lot of care and respect, to try to connect with them.
For Garcia, like many officers, the threat of another September 11th attack is a great motivator to get things right on the job.
So being able to actually work at the TSA, I feel like I'm giving back. I'm doing something to avoid that ever happening again.
For Nightly Business Report, I'm Kate Rogers in Newark, New Jersey.
Pepsi gets a lift from its snacks, and that's where we begin tonight's market focus. The beverage giant said strong demand for Cheetos and Lay's potato chips offset declines in soft drinks, and that led to an earnings beat. Pepsi also said it put more ad dollars behind its beverage business, helping to slow a year-long drop in soda sales. Overall, the company said it's pleased with the results.
Our revenue and EPS obviously came in quite strongly, and the investors seem pleased with that. If you look at where we are, the international businesses in total are performing very well. Developing and emerging markets up 6%. Operating profit internationally up 12%.
Shares rose nearly 5% to $112.89. The merger between Keurig and Dr. Pepper is complete. The newly formed company, which is now one of the largest beverage providers in the U.S., began trading on the New York Stock Exchange today. The previously announced deal gives the company greater scale and a stronger portfolio. Shares of Keurig Dr. Pepper rose 11% to $22.19. And Nordstrom lay out its 5-year financial forecast through 2022. The retailer says it expects earnings to rise as much as 6% on an average annualized basis. The company also reaffirmed its sales outlook for 2018. That's below street estimates. But some analysts questioned how Nordstrom would continue to grow, and the shares fell more than 2% to $52.09.
Chipmaker Analog Devices is teaming up with Chinese tech company Baidu to create self-driving technology. The companies will share resources to improve Baidu's existing autonomous driving system. Shares of Analog Devices rose more than 1% to 98.54, while Baidu was down a fraction to 261.25. And Boeing said that strong demand for its 737 jets helped deliveries for the first half of this year rise by more than 7%. That was more than double the deliveries of rival Airbus during the same time frame. Boeing rose 1.5% today to 347.16. And the Wall Street Journal says that the European Union may hit Google with a multi-billion-dollar fine. Officials believe that the tech giant illegally abused the dominance of its Android operating system. Shares of Google parent Alphabet were off a fraction to 1167.14.
Companies are repurchasing stock at a record pace. According to a recent report from Trim Tabs, public companies announced more than $435 billion in buybacks in the second quarter. During that 3-month period, Apple announced the biggest buyback at $100 billion. JP Morgan, Bank of America, and Citigroup announced buybacks following the results of the Fed's stress test. And Nike, with a $15 billion buyback, rounds out the top 5. So joining us to discuss this is Mark Lucchini. He is the Chief Investment Strategist at Janney Montgomery Scott. Good to see you again, Mark. Welcome back.
Thanks, Sue.
So do you expect this to continue? And what are the contributing factors that have led to these pretty much record results?
Sure, of course. Well, I do expect it to continue. I mean, if you look at the recent past, the last 5 or 6 years, the amount of corporate buybacks have been averaging about $100 to $150 billion a quarter. So this quarter is no different in that respect, except that number is getting closer to $200 billion, which would be a record going back at least 15, almost 20 years at this point. Given the level of corporate profitability, we know corporate profits are running very high. Last quarter, 23, 24% year over year. This quarter expect to be something around 20%, barring any earnings surprises to the upside. That compounds the cash that companies are generating today, not to mention the fact that as a consequence of the Tax Reform Act, companies are repatriating tens of millions, if not billions of dollars, and as a consequence, that's going to help to fuel further buybacks as we go forward.
But you know what the naysayers say about buybacks, Mark. I mean, it's not the best use of capital. They should be building factories or innovating or creating jobs in some way. This is financial engineering that artificially inflates stock prices. They're buying at a high level right now with the markets where they are. What do you say to them? Is this a good thing or not for investors?
Well, Bill, I frankly have sympathy with that view. I think, companies do use this as a reason to not be necessarily creative enough relative to the other things they could do to deploy shareholder capital. And especially if they're measured on a metric of profitability or something tied to it, obviously it can pad management's pockets as opposed to shareholders in other ways through, as you said, smart strategic acquisitions or perhaps capital expenditures, which of course are increasing at a relatively high rate. So I expect that to continue, if you will, contemporaneously with share buybacks. But I think investors do need to be discriminate with regard to those companies that are using their capital properly and those who don't seem to be particularly creative with it and are retiring share prices at very elevated valuations.
Very, very quickly, Mark, is some of the reason that these buybacks are taking place is because they're safer than doing deals or investing in other areas?
Well, I think, Sue, it's the easiest one, and it probably results in the quickest return on investment because you can retire shares and immediately see accretion to your profitability over that which might take days, months, or even years in the case of an acquisition to turn out.
Mark Lucchini, thank you so much, Mark. Mark is with Janney Montgomery Scott.
Coming up, why Texas is a lone economic star.
I'm Scott Cohn. What a difference the price of oil makes. We're in a state that was a competitor for sure, but now it's America's top state for business. The story coming up on Nightly Business Report.
Tesla has plans now to build a factory in Shanghai. The electric car maker's plant is expected to produce 500,000 vehicles a year sometime in the next decade. Shanghai authorities revealed that Tesla's CEO Elon Musk was in that city to sign the agreement. China is already Tesla's second biggest market after the United States.
CNBC is out with its annual ranking of the top states for business. All 50 states were ranked for competitiveness across 10 categories. So here are the top 3. Utah ranked 3rd. It has a strong economy, but it lost points on education because it faces underfunding of its schools. Washington State came in at number 2 thanks to a solid workforce and a growing economy, but high costs were a negative. And the top state for business is Texas, helped by rising energy prices and the job growth that goes right with that. Scott Cohn is in the Lone Star State for us tonight.
Year after year, from the hill country to the Gulf Coast, no state has more of what it takes to compete than Texas, America's top infrastructure.
This is the energy capital of the world.
Ready access to capital and a culture of innovation. But this year, Texas has something else.
Proprietor here in the Mayor Midland.
You can see it at the Mulberry Cafe in Midland, one of the fastest growing cities in America.
Starting in January 1, I mean, the city just became on fire.
Texas crude up some 60% from a year ago, helping make Texas America's top economy, with more than 350,000 new jobs in the last year.
Texas is the #1 state in the United States for in-migration from other states. People are voting with their feet. People are coming to the state of Texas more than any other state, and that's people and companies.
But Texas does poorly in education. No state has a larger percentage of people without health insurance. Crime is up. And the Democratic nominee for governor warns about the messages sent by measures like a state ban on sanctuary policies for immigrants and a proposal to regulate transgender use of bathrooms.
I call them the job-killing bills. You know, this needs to stop being the Texas brand.
There are other issues. A potential trade war or an end to NAFTA could have a huge impact on Texas's import and export business. And there are concerns the state could face a budget deficit when the legislature reconvenes next year. But for now, Texas is enjoying the best of times as America's top state for business. For Nightly Business Report, I'm Scott Cohn in Fredericksburg, Texas.
And to see the complete list of the top states for business and to find out where your state ranks, head to our website, nbr.com.
One last look at the day on Wall Street. Another rally day. The Dow up 143 points. The NASDAQ and the S&P up a fraction as well today.
And that will do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.